Good afternoon. Welcome to the TheoTRADE afternoon video. I'm Blake Young. Today is January 2nd, 2025. Welcome to the new year. And we're going to talk about basic materials. We are at a key point where I think basic materials are going to split in part, where we're going to see more downside with about half and more upside with the other half, because of where we're at in the economy and with where we're at in stock prices. So to start out with, we do want to highlight really quickly that the equity market has rallied up and created this maybe head and shoulders pattern. I wouldn't really call it a head and shoulders pattern because it is downward sloping, but even still, we have a kind of a neckline that is setting up for lower highs and lower lows. Today's move is a higher high, lower low, showing that we have some sustained sell-off in the S&P 500, and we could see this repeat. As I talked about today in the main room for TheoTRADE, we looked at some key levels, and I'm looking for at least a 2.5% drop in price, probably 5% over the next 2 weeks. So I'm going to watch for that, and that's my expectation over the next couple of weeks. If this holds up in the bearish momentous trend, we expect that downside to continue. Let's start all that over and clear all this off. Good afternoon. Welcome to the TheoTRADE afternoon video. I'm Blake Young. Today is January 2nd, 2025. Welcome to the new year. Hope everybody had a fantastic couple of days there. And we're back to look at how the day has played out and therefore how the year has started out. And we're also going to be looking at basic materials. So to start with, here's the U.S. equity market, the S&P 500, at least in the futures context. And I just want to highlight a couple things that we've looked at in the main room today. And that is that we sold off, created a higher high, lower low through here. And with the higher high, lower low, that's telling us that we've shaken out some of the trades. We've shaken buyers and sellers out. We've net negative pushed this down with higher than normal volume. And so we see the higher volume on the downside, and it could be setting up. And even though I wouldn't call this a head and shoulders, it's still the same rough target. That if we saw that break down through that low, we could be looking for an additional 2.5 to 5% decline over the next 2 to 3 weeks. And that would push us back into 5,700, 5,600, even all the way down to 5,500 maybe in the next couple of months. And we talked about that and associated with some key levels in the monkey bars. If you're part of the TheoTRADE main room, go back and check that second hour this morning. But the main thing here is we're seeing equities reposition and sell off. That's what that higher high and lower low is creating for us and setting us up for some sense of that we're going to reposition and rotate money around inside of equities, but also seeing this flight to safety in the US dollar. The interesting aspect of this is the worst sector for the last number of months has been basic materials. So if I look at basic materials, you can see that the last 3 months we've gone from 97 all the way down to 83. We've seen nearly a 15% decline in basic materials. We've fallen back down to last year's support level. This is all this area through here. January and February is this barrier, and this, we could argue this is cyclical behavior, but I'm seeing that this sell-off is still continuing, but it's getting close to the area that I would expect to see the top performers stabilize and go the opposite direction. The bottom performers have more downside to go. So I think there's going to be an opportunity to kind of bifurcate this key industry of basic materials and go bullish the best and go bearish the worst. If we're looking for the best basic materials stock, I'm going to go back to what we've talked about in the main room again, when we talk about Thorough Thursday and getting to the fundamentals, the financials. And so we looked at different things like fixed charge coverage. Fixed charge coverage would be that thing that says, what do we have every month as a fixed charge, an ongoing expense, and how much money do we have to cover that? Because if we are producing basic materials and we don't have enough money to make ends meet, that's a problem. And then we want to find things that are highly discounted, giving us a book value that is showing us that we can buy cheaper and setting us up for the next bullish move. And it really came down to, for basic materials, is if this is going to be the low down here near the bottoms, we are looking for trades in things like Freeport-McMoran, United Steel, Dow Chemical, Rio Tinto, Wheaton Group, and the Agnico Eagle Mines, if I'm saying their name right. Those are the only stocks that qualify of all the basic materials stocks out there for liquidity and for these stable financials. So let's go through these really quick. We're going to look at FCX. FCX is closing right at support. This is not a great bounce. It's certainly a widening pattern. It looks a lot similar to the broad market, but gold did well today. And so if gold can maintain, gold was up 1% while the broad market was down 1%, that is likely to give some lift to Freeport-McMoRan. And if we were to look at Freeport and run the numbers on their options, what we'd find is they're willing to pay us a 3% premium or more at the current price. In fact, if we look out to 1 month, go out to January 31st, and look at the short put meaning that we're selling a put and willing to be forced to buy the stock at 38, they're willing to pay us $4.77%, or in other words, $1.70, $1.75 at the current price. So if it stays where it's at, we make 4.77%. If it goes up, we make 4.77%. If it goes down, we're protected by nearly 5% on something like Freeport. So I really like Freeport as a setup today, just for its payment that it's giving us on the short put and giving us that sense of safety. Now, gold, again, going up while the rest of the market is going down. If we look at something like U.S. Steel, now we're getting into a different metal, a basic metal, and you can see that they were not selling off into the end of the year. And so this is a pullback into a strong bounce. From a technical perspective, half of a large candle oftentimes acts as a barrier or support, and I'd be looking at this going higher again. Dow Chemical, similar situation. It's pulled back inside that bounce, but it's still defending. And Dow Chemical, if we were looking at its implied volatility and its short put at the money, it's also going to pay us about 3.69% as a short put over here to be willing to buy into Dow at the current price. So it's not as much catching a falling knife, it's seeing that the knife has stopped falling and is holding at support, and they're willing to pay us 3.69, 3.7, 4.7% to buy these stocks at their key support level. If it goes lower, we're protected by 4%. If it goes higher, we get 4%, and that's just for 1 month. Let's go back and now look at Rio Tinto. This is going to copper. So we've talked gold, we've talked steel, we're now and chemicals. Now we're talking about copper. And copper is sitting here at support as well, or better said, Rio Tinto is sitting at support as well. It looks almost identical to U.S. Steel and FCX. If we look at the premium on this one, we don't have month-to-month premium, so we have to choose either 2 weeks or all the way out 5 weeks. And if we look at Rio for just 2 weeks, 2 weeks, somewhere in between, if we're willing to buy it at 60, that's at 3% premium. So it has to get above 60 to get the 3% premium. If we're to go out 50 days, Rio is willing to pay us 4.6% at 60 as well. Again, we're somewhere in between, so the 57.50 is probably the better trade, and that's 2.5%. Not as good of premium as we got on the other three, but it's still acceptable for a stock that's sitting here at support. The last two are also precious metal mines, AEM and WPM. So if we take a look at AEM, great bullish move following gold all the way up. This is one that does not need confirmation. It's already broke out of its pattern. It's already gapped up, closed higher to start the year. An easy target for me would be a swing high back up to 87. And so there's about 10% move in AEM. On Wheaton's also giving us the bullish bounce. Not as strong of a breakout here, but if it can clear today's high, I think we could have a bigger target because we could swing all the way back up to 68, and we're talking a 28% move in Wheaton. On these as well, the premiums are decent. We're at 3.5% for a 58 short put on Wheaton. On Agnico Eagle, they're paying a 7.3% at 85, or at 80, saying I'm willing to buy it if it falls, they're willing to pay us 4%. So this is the best return for the opportunity in a short put because it's 4% even if it falls. So it would have to fall down $1.50 to get assigned, which in essence is saying you have to fall 2% to be at risk while we protect you 4%. So it would have 6% decline before you're in trouble on the short put at $80 on Agnico. And if we're looking at basic metals and basic materials, we see that prices have fallen, and we look at the fact that manufacturing is turning back. Manufacturing Purchasing Managers Index is telling us that we're seeing it turn back up after dipping below 50. And if that's the case, we're seeing likely slightly better demand at these key low levels. If we look at tomorrow, we have ISM manufacturing and ISM manufacturing prices. If these go higher as well, that is likely an indication that all those stocks that we just looked at are opportunities to buy back into, because we're going to see higher demand in manufacturing. And if there's higher demand in manufacturing, those companies that deliver the basic materials are the ones that benefit. And these opportunities, again, are low cost, low risk, safety built in with those short puts, while also providing 3 and 4 and 5% returns for a single month. All of these look very promising to me over the next month. That's going to do it for me today. Join Brandon and I tomorrow as we take a look forward into 2025, taking our best picks of the year, looking forward, and some of the things we'll be watching in the next days, weeks, months, and year. Thanks for watching. We'll see you in the morning.